What is up guys, my name is Ignas, welcome back to the channel. 2 weeks back, Molson Coors Brewing Company reported strong earnings, but that didn't help the share price. Company's CEO Gavin Hattersley went on CNBC to discuss their outlook going further. This is his take on their product lineup.
Well, Kenny, this is no surprise to us. I mean, we've been saying for almost a year now that we didn't see that the hard seltzer category would grow at the meteoric rates that it was growing. And so this is no surprise for us. From our perspective, we launched a number of hard seltzers in the US market, and we've got two clear winners in Vizzy and in Topo Chico hard seltzer. So, in order to prioritize and focus and put all our investments and efforts behind our two clear winners, that led us to the decision to in the US, stop producing Coors Hard Seltzer. I would tell you that up in Canada, Coors Hard Seltzer is doing really, really well. It's gaining double-digit share in some big retail outlets in Canada. So it will continue in that market.
So the company is leaning out on names that doesn't work and focusing on the brands that do work for the current market. Gavin is also really confident in the company's ability to put those favorable products out for consumers.
From our perspective, the seltzer category is here to stay. And we've also been saying for quite some time now, whether it's growing 10 or 20 or 40%, it's still the fastest growing segment in our space. And it's good for the beer industry, and it's surely good for our overall portfolio. I mean, in the second quarter, we had our largest share of revenue in our above premium space. And the seltzers certainly played a big part of that. So it's here to stay. From an innovation pipeline point of view, we've got a really robust pipeline of innovation coming next year and in the years beyond. Probably too soon to tell you about that just yet, but we've got some exciting ideas.
So with growth in mind, today for the comparison we have a few beverage brewing companies. These are Molson Coors, ticker symbol TAP, Boston Beer, SAM, and Compania Cervecerias Unidas, ticker CCU. So in order to make the comparison possible, we will be looking into 8 different factors: analysts' price targets, forward price to earnings ratio, annual revenue growth, price to sales ratio, return on equity, last 4 quarterly earnings results, current ratio, and dividend yield. The best company under each factor will get a point, so it is possible to have from 0 to 8 points, and in the end the stock with the most points will be considered the winner of this comparison. I hope that the rules were clear, so let's begin. The first factor we have are the analysts' price targets. As investors, we want to check how far the current share price is away from the average analyst target. If the current price is under the average target, we will consider the stock as undervalued, and in the end the company with share prices furthest away from the average analyst target to the lower side gets a point for this factor. For Molson Coors, we have 18 price targets of analysts. They range from the lows of $38 to the highs of $74 per share. The average is at $57.89, and the current share price is at $49.45. This means that there is around 17.1% room for the current price to reach the average target of analysts. For Boston Beer, we have 15 price targets of analysts. They range from the lows of $765 to the highest of $1,800 per share. The average is at $1,352.80, and the current share price is at $676.88. This means that there is around 100% room for the current price to reach the average target of analysts. For CCU, we have 8 price targets of analysts. They range from the lows of $10.26 to the highs of $30.31 per share. The average is at $19.52, and the current share price is at $20.82. This means that the current price needs to go down for 6.2% to reach the average target of analysts. Results for the analysts' price targets factor are in the table, and with most room for growth, Boston Beer gets the first point. Second factor is the forward price to earnings ratio. It is calculated by taking the current share price and dividing it by the estimated future earnings per share. This is the standard price to earnings calculation, with the difference that earnings here are predicted by analysts. So in the end, the stock with the lowest forward price to earnings ratio gets a point for this factor. Molson Coors has a forward price to earnings at 11.69. Forward price to earnings for Boston Beer is at 20.16. And CCU has a forward price to earnings at 21.03. Forward price to earnings ratios are in the table, and with the lowest value, TAP gets the first point. Third factor is the annual revenue growth. As investors, we want to find that the revenues of a company are on a steady increase. We will take a look into the revenues of the four most recent years and compare them one by one. If revenue was on the increase from one year to the next, we will consider it as a +1, and if it was on the decrease, it will be a +0. Then we sum the results up to a minimum of 0 and a maximum of 3, and in the end, the stock with the highest sum gets a point for this factor. Annual revenues for TAP, and going into 2018, there was a decrease to $10.77 billion US, then into 2019 we had a decrease to $10.58 billion, and going into 2020 there was another decrease to $9.65 billion. So with 3 decreases in annual revenues, we get a sum of 0. Annual revenues for SAM, and going into 2018 there was an increase to just under $1 billion US, then into 2019 we had an increase to $1.25 billion, and going into 2020 there was another increase to $1.74 billion. So with 3 increases in annual revenues, we get a sum of 3. Annual revenues for CCU, and keep in mind that these are in Chilean pesos. So going to 2018 we had an increase to 1.78 trillion pesos, then into 2019 there was another increase to 1.8 trillion, and going into 2020 we had another increase to 1.86 trillion Chilean pesos. So with 3 increases in annual revenues, we get a sum of 3. Results for the annual revenue growth factor are in the table, and with sums of 3, both SAM and CCU each gets a point. For factors, the price to sales ratio. It is calculated by taking the company's market cap and dividing it by the trailing 12 months worth of sales. The formula suggests to be looking for a company with a low market cap and a high result in sales. So in the end, the stock with the lowest price to sales ratio gets a point for this factor. Coors has a price to sales at 1.09. Price to sales for Boston Beer Company is at 3.96, and CCU has a price to sales at 1.48. Price to sales ratios are in the table, and with the lowest value, Molson Coors gets another point. Fifth factor is return on equity. It is calculated by taking the net income and dividing it by the shareholders' equity. A high ROE shows that the company is well managed and that money from investors are efficiently handled. So in the end, the stock with the highest return on equity percentage gets a point for this factor. TAB has a return on equity at -4.19%. Return on equity for SAM is at 24.94%, and CCU has a return on equity at 11.69%. Return on equity percentages are in the table, and with the highest value, SAM gets another point. Sixth factor are the last 4 quarterly earnings results. When a company reports earnings, they are compared to expectations of analysts. So earnings can either beat expectations, meet them, or miss them. We will consider that beating expectations is a +1, meeting +0.5, and missing 0. Then we sum the results up to a minimum of 0 and a maximum of 4, and in the end, the stock with the highest sum gets a point for this factor. We have quarterly earnings for Molson Coors, and Q2 of 2020 beat expectations, Q3 beat, Q4 missed expectations, and Q1 of 2021 beat. So with 3 beats and 1 miss in quarterly earnings, we get a sum of 3. Quarterly earnings for Boston Beer, and Q2 of 2020 beat expectations, Q3 beat, Q4 beat expectations, and Q1 of 2021 beat. So with 4 beats in quarterly earnings, we get a sum of 4. Quarterly earnings for CCU, and Q2 of 2020 missed expectations, Q3 missed, Q4 beat expectations, and Q1 of 2021 beat. So with 2 beats and 2 misses on quarterly earnings, we get a sum of 2. Results for the last 4 quarterly earnings factor are in the table, and with the highest sum, SAM gets 1 more point. Seventh factor is the current ratio. It is calculated by taking the current assets and dividing them by the current liabilities. As investors, we want to find that the company is able to cover its debts with assets, but also that they are actually being leveraged. So in the end, the stock with the highest current ratio under 3 gets a point for this factor. TAB has a current ratio at 0.74. Current ratio for SAM is at 1.62, and CCU has a current ratio at 1.69. Current ratios are in the table, and with the highest value under 3, CCU gets 1 more point. The last factor we are taking into account is the dividend yield. It is calculated by taking the annual dividend per share and dividing it by the share price. A high yield may suggest that profits are being shared with shareholders, and that is a great passive income source that we as investors are looking for. So in the end, the stock with the highest dividend yield percentage gets a point for this factor. TAP is paying an annual dividend of 34 cents per share, which is a yield of 0.69%. The Boston Beer Company is currently not paying any dividend, and CCU is paying an annual dividend of 55 cents per share, which is a yield of 2.67%. Dividend yields are in the table, and with the highest percentage, CCU gets another point. We can calculate the results, so Molson Coors has 2 points, Boston Beer 4, and CCU 3. This means that with a sum of 4 points, Boston Beer Company, ticker symbol SAM, is considered the winner of this comparison. And that was it. If you got value or new ideas, then make sure to push that thumbs up, it helps the channel a lot. Are you buying any of the beverage brewing companies? Share your holdings in a comment below. If you are interested to know exactly when I buy or sell in stock, then consider the options on Patreon. By becoming a patron, you will get access to my stock watch list, where I set price targets around buying and selling positions in different names. This could be a great option to track my moves closely. Last week we did a stock comparison on a few largest industrials names with General Electric, Honeywell, and 3M. And there is also an update on our technical analysis stock trading series. If you are interested in any of these, then click on a video currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.